All right, let's dive into this trading psychology thing, right? We're looking at Trade Mindfully by Gary Dayton today. I gotta say, some of these excerpts you sent over really hit home. This isn't just for, Wall Street gurus. This is for anyone who's ever looked at the markets.
What grabs me about Dayton is how he goes after the mental game. Like, yeah, charts and patterns matter, but if your head's not screwed on right.
You're gonna self-sabotage before the opening bell even rings.
Exactly. He calls them mental blind spots, these little biases we all have that can tank our decisions, especially in trading where everything's moving so fast.
Okay, blind spots. Sounds sneaky. Hit me with an example. How do these trip us up when we're trading?
So there's this classic problem, right? A bat and ball cost $1.10. The bat's $1 more than the ball. What's the ball cost?
10 cents. It's always 10 cents. Gotta be.
Most people say that it's intuitive, but do the math.
Hold on. Oh, shoot. 5 cents. I walked right into that.
And that's the point. Our gut instinct isn't always right, especially in trading. These mental shortcuts, they work in daily life, but in the market, they're thinking craps.
So how do we avoid these traps when we're looking at charts, making decisions with real money on the line?
Dayton gets into some specific biases that get traders, like representativeness. He's got this story about Zoe. She got obsessed with a certain candlestick pattern. So focused on how it looked, she missed huge red flags on the bigger time frame.
Like judging a book by its cover, but that book's the market and it can bankrupt you.
Exactly. That's representativeness. We see what we want to see. A pattern might look bullish alone, but that doesn't mean it'll play out how we think. And to top it off, Zoe got hit with recency bias too, putting too much weight on a few recent wins with that pattern.
It worked before, it'll work again. Oh man, that's me with my bus. Always late, gotta be right. Turns out I was just remembering those times and ignoring the bigger picture.
Happens to all of us. In the book, there's also Nathan, missed out big, because a setup had recently lost him money. So he hesitated, even though long-term it was a good setup. One bad experience overshadowed months of data.
So how do we stop these biases from messing with our heads when we're in the thick of it, making split-second calls?
Dayton says we got to engage the deliberative mind. The part of our brain that thinks slow, analyzes, doesn't jump at every flicker on the screen. Like Nathan, he'd done his pre-market analysis, was going to short a stock at a price he'd set.
Sounds like he had a plan. Did he stick to it?
That's where it gets good. Morning rally hits and Nathan tosses the whole plan out, suddenly thinks it's a bull market now. Sees that quick upward tick and boom, intuition takes over. Missed his entry, lost potential profit.
Let his emotions take the wheel. That fear of missing out trumps his own analysis and prep.
Right on. And this is huge in Trade Mindfully. The power of emotions, fear especially, how that fight or flight stuff can literally hijack our brains, making clear thinking impossible.
Okay, let's talk fear. That uninvited guest who always shows up at the worst times. What's happening up there when fear takes over?
Dayton explains that fear pumps out cortisol, a stress hormone that messes with rational thought. When we sense a threat like, say, a losing trade or amygdala, the brain's alarm system freaks out. Heart races, breathing gets faster, body's in survival mode, ready to fight or run.
So my brain's saying, screw the trading plan, get me out of here.
Pretty much. Survival first, logic second. It's kept us alive for centuries, but in trading, it's how you make stupid, impulsive moves. And it's primal, this fear response, like hardwired survival stuff. Not weak, not something to be ashamed of,
So we're not talking about just like deleting fear, because that's probably not happening, especially not in trading.
Right. Dayton says trying to squash it just backfires. Makes it worse in the long run.
Okay, so how do we handle it then? I can't be hiding under my desk when the market dips.
Acceptance is the key for Dayton. Not fighting it, but making room for fear. And, this is big, not letting it run the show.
So it's like, all right, fear, I see you, but you're not calling the shots here.
Nailed it. He uses the example of Sully, the pilot who landed that plane in the Hudson River. Terrifying situation, right? But he didn't pretend he wasn't scared. Acknowledged it, stayed focused on his training, and dealt with the crisis.
Talk about grace under pressure, but how do we get that kind of mental toughness, especially in the heat of a trade?
That's where mindfulness comes in. Dayton's whole thing is it's like upgrading how our minds work. Less reactive to those freakouts, more able to think straight, even when everything's going haywire.
Mindfulness. Everyone's tossing that word around, but what's it actually mean for trading?
Two parts. Awareness, acceptance. Awareness is just noticing what we're thinking, how we're feeling, no judgment, like a neutral observer. Then, acceptance, not letting those thoughts and feelings boss us around.
So when my brain's going nuts over a trade, I don't try to make it shut up. I just let it do its thing.
Exactly. Totally different way of dealing with what's going on inside. Dayton uses this analogy, a tug of war with a monster. Fighting our thoughts, that's like pulling on the rope. Tiring, pointless. Letting go of the rope, that's acceptance. That's how you break free.
Okay, I love that visual, but how practically do we let go when it's fear messing with us during a trade?
He's got a bunch of mindfulness exercises in the book. One's called mental parking. Great for when your thoughts are racing and about to make you do something stupid.
Mental parking, I am here for anything that chills my brain out, especially when I'm trading. Lay it on me.
So imagine
Yeah.
you took a loss, mind's replaying it, second-guessing, maybe even beating yourself up. Sound familiar?
Oh, yeah. My brain after a bad trade is not a fun place.
Mental parking, you go, okay, I'm anxious, I'm pissed. But then you gently shift focus back to right now, what you can control, like scanning for the next setup or going over your plan again.
Hitting pause on the mental pity party and getting back to business.
That's it. Not suppressing those feelings, just choosing not to indulge them right then. Another good one is thought labeling. Instead of getting sucked into the thought, I'm going to blow my account on this, you just label it thought or fear thought.
Like, oh, there's that fear again. How predictable. Almost amused by it.
You got it. That labeling creates space between you and the thought. It's less powerful then. See, it's just a thought, not an order you got to follow. Dayton says don't argue with them. It doesn't work.
What you resist persists, right?
Bingo. Acceptance is key. He even has people sing their self-criticism, like it's Jolly Goodfellow.
Okay, that's amazing. I'm picturing it now. Kind of makes those negative thoughts less scary, you know?
It's about not taking it all so seriously. The point is, mindfulness takes practice. But the more we do it, the quicker we spot those mental traps before they cost us money.
So we've got these blind spots, the fear response, now mindfulness. How does it all actually make us better traders, though? How do we put this into practice?
That's where Dayton brings in his before, during, after framework for trading. He says every good trade comes down to solid prep, good execution, and reviewing what you did right and wrong.
Like building a house, got to have that strong foundation or it'll crumble, right? So let's start with before. What does good prep even look like for a trader?
It's about laying the groundwork for your decisions, having a clear plan, knowing your own strengths and weaknesses as a trader, setting realistic goals.
So it's not just the market I got to know, it's myself too, right? Like what makes me tick, what trips me up if I'm not careful?
Exactly. Dayton says you got to have a process, a system for trading that keeps emotions and biases in check. He compares it to like casino operators or those guys who manage sports teams. They get that it's about the process, even when their gut's telling them otherwise.
Makes sense. Changing strategies on a whim is how you lose your shirt? Like sailing without a rudder?
Exactly. And part of that before stage is setting SMART goals.
SMART goals. Remind me what that means again.
Specific, measurable, achievable, relevant, time-bound. So not some vague thing like make more money. We all want that, right? But something concrete. Increase my entry accuracy by 5% this month, or trade 20% less often this quarter, that kind of thing.
Okay, that's way more actionable, something you can track and see if you're actually improving.
And here's where it ties back in. By setting SMART goals for the mental side of trading, like I'll do mental parking 5 minutes a day, or I'm going to track how I'm feeling before, during, and after every trade. That's us building a stronger mindset.
I love how Dayton makes the psychology stuff so practical. It's less intimidating that way.
Absolutely. It's all connected. This before phase, it's about setting yourself up to win mentally as much as anything else.
This before stuff is gold. But what about when we're actually in it? The during phase, executing trades. What mental skills matter most then?
That's where internal confidence comes in, mental discipline, poise. These are like the mental muscles we need when things get rough.
Internal confidence? That's different from just feeling good because you had a couple winning trades, right?
Big time. It's not about being cocky or anything, and it's definitely not depending on profits, because those can vanish in a second. It's about trusting the work you put in, knowing you've got a solid strategy and you can execute it no matter what the market throws at you.
That's a lot more stable, for sure. Like this quiet confidence that you're ready for whatever comes. How do we build that kind of confidence, though? Because trading can be rough.
It starts by understanding this thing called the probabilities paradox.
Okay, you're going to have to explain that one. Probabilities paradox.
Sounds intense.
It means we can never know for sure how a single trade's going to go. Even if it's a setup you've used a million times, there's always that chance it'll go against you.
That's just the market, right? Probabilities, not guarantees.
Right. But here's the paradox. We can't control single trades. But over a lot of trades, if our strategy's sound, if our risk management is good, those probabilities start working in our favor. Like flipping a coin, one clip, who knows? But flip it 1,000 times, it'll be close to 50-50.
Exactly. So don't get caught up in every win or loss. Zoom out. Focus on the long game. That's how you build trust in your process, that inner confidence that you're on the right track, even when things get bumpy. It ties back to the during phase. It's easy to get emotional in the moment, but if we remember the probabilities, we can stay grounded.
So how do we stop ourselves from getting swept up in the moment, though? Because my brain, when I see a trade going south, it's not pretty.
Mental discipline, my friend. It's staying focused on the process, even when it's hard, even when every instinct is telling you to abandon ship.
So like not chasing losses, not doubling down when you're angry, even when it feels impossible not to.
That's it. Recognizing those emotional impulses and making the choice that's in line with your goals, your plan.
It's like a stop loss, but for your brain.
Love it. Got to protect your mental capital, just like your bank account. Dayton says, have your exit points planned beforehand and stick to them, even when it's tough. He also says, know when you're mentally fried and take a break, because that's when we make dumb mistakes.
Oh yeah, we've all been there. That mental exhaustion when you're just done. Taking a step back can be huge. Speaking of mental toughness, what about poise? Dayton talks about that.
Poise is interesting. He calls it the ability to do what you know is right, even when it feels awful. Staying steady when the market's trying to knock you off balance.
Sounds kind of superhuman. How do we get poise?
That's a lot of what we talked about already. Mindfulness, those diffusion techniques, focusing on the process, not the outcome. It's feeling the feels, but not letting them control you.
Like when a trade's in profit, but you're terrified of giving those gains back, poise is what makes you stick to your exit plan instead of panicking and selling too early.
100%. That quiet confidence again, knowing you're good, even when your feelings are screaming otherwise. Dayton's got exercises for building poise. Reminding yourself of your long-term goals, focusing on what you can control, and being kind to yourself when you mess up. Because we all do. Nobody's perfect. It's how you handle those moments that matters.
So much good stuff here, really. We've covered a lot, but that before, during, after thing, that's the framework, right? Let's dig into after more. Constructive self-assessment. Sounds kind of formal. What's that mean for us traders?
Basically looking back at our trades, the good, the bad, all of it, and using that to get better, to refine our process. Dayton says this isn't a once-a-year thing either.
It's got to be a habit.
Exactly. And it's more than just, did I buy and sell at the right time? It's, how was my headspace? Did I stick to the plan? What could I have done better? He's got some killer questions in the book to guide us.
Those are probably worth their weight in gold, like little clues to help us see those blind spots we all have.
Totally. And here's where it gets deep. He says, don't beat yourself up during this after phase. Approach it with curiosity. Be kind to yourself, not critical. Mistakes, they're not failures, they're lessons.
Easier said than done sometimes, especially when a trade goes bad and you're feeling it.
Oh, tell me about it. That regret, that frustration, it's real. But Dayton's like, change how you see those moments. They're data points, information to help us make better calls next time.
It's that growth mindset thing, right? Embracing the tough stuff, using it to learn and get better.
Nailed it. He says that mindset is huge for traders because the market's always throwing curveballs. He even mentions some research like when our egos are threatened, we make dumber decisions, even outside of trading.
Oh, 100%. If you're insecure, you're not seeing straight. Not going to spot those blind spots, not going to be open to new info. And in trading, being closed-minded is dangerous.
It's about being humble, knowing we're all learning. Even the pros mess up.
So how do we use that growth mindset? When we're reviewing our trades, what can we actually do to make sure it's not just dwelling on the bad stuff?
Dayton's big on deliberate practice. Not just trading a lot, but doing it with purpose. Pushing ourselves, looking for feedback to find those areas we're weak in.
Like shooting hoops in your driveway versus training for the NBA. One's fun, the other's how you reach the next level.
Exactly. He says this deliberate practice is how you master anything. Sports, music, you name it. Even suggests setting time aside each week. Doing practice trades, analyzing past performance, trying new strategies.
Got to be proactive about it, seeking out ways to get sharper mentally, too.
Right. And this loops back to the framework. Everything we learned during the after phase, it feeds right back into the before when we're prepping for the next trading day. It's a cycle.
I mean, like constant is change, right? Market's always changing. We got to change with it.
And not just keeping up with the latest trends, it's about mastering ourselves, building those mental skills so we can ride the waves, not get crushed by them.
That's the truth. Dayton's book is awesome for this. Anyone who's serious about trading, this is more than just stock tips. This is about becoming a stronger, smarter trader.
Couldn't agree more. It's like sometimes the biggest enemy is in the mirror, our own bad habits.
Yeah.
Dayton gives us a way to break those, to actually become the traders and the people we want to be.
This deep dive has been fantastic. So many great takeaways from Trade Mindfully. And listeners, here's something to think about. How's your trading psychology? What's one small thing you can do right now to start building that unshakable trader's mindset? Maybe try one of Dayton's exercises. Set a SMART goal. Commit to practicing with intention. Whatever it is, remember, this trading journey, it's about self-discovery, it's about mastery, and it's worth every bit of effort.